Hey guys, it's Emmanuel back here with another video, and today we're going to talk about something that I don't really talk about here on my channel, and that is finance. Today I'm going to teach you how you can make your money grow and invest in the stock market as a teenager. Let's get it! Before we get started, we must actually understand what the stock market actually is. The stock market is the aggregation of buyers and sellers of stocks, which is a representation of an ownership of a specific company. What this means is that if you buy a stock of a company, you basically own a small share of that company. So how do you actually make money in the stock market? Well, it's actually pretty simple. All you have to do is buy low and sell high, plain and simple. For example, if you buy a single Tesla stock, which costs around $730 today, and sell it tomorrow for $800, you just made a profit of $70. That's that. Now let's talk about the two types of investments, long-term and short-term. Let's talk about the long-term first. Long-term investments, as the name suggests, are long-term investments that grow your portfolio over a long period of time. These investments take from several years up to several decades, and I believe that this is one of the easiest ways that you can accumulate wealth and become a millionaire by the time you retire. Let's move on to the short-term investing. Short-term investments are investments that are held for a shorter period of time, meaning these investments are sold after 5 years of keeping them. Usually these investments take around 1 to 3 years, but there are also some that we encounter called traders. Traders are people who buy and sell stocks for a very short period of time, from scalpers who trade within minutes, to day traders who buy and sell stocks within the day, and even swing traders who buy and sell stocks from a few weeks up to several months. Basically, in short-term investing, you can get higher profits quicker in a shorter period of time with the added risks. Look, you can always be profitable both ways, but if you're the type of person who wants to be on the safer side, then long-term investing is your best bet. However, if you're the type of person who likes researching and technical analysis, meaning researching specific stocks and their movement in the market, then short-term investing might be for you. Personally, I'd like to use both in my portfolio because I want some long-term investments for my retirement funds and also some short-term investments to make a quick buck. But always remember that time in the market always beats timing the market, so choose wisely. You see, one of the reasons why the people don't like the stock market is because it's risky and they can easily lose their money. And yes, that is true, especially if you have paper hands and get easily affected by the market. But if you understand that dips are normal and these things always happen, then this is something that you can avoid. Also, always remember that dips are basically like a sale for the stock market. And what do you do when there's a sale? You buy more. Now you might be wondering, how do you prevent buying risky stocks? Well, let's move on to another spot for that. Now, if you're still watching up to this point of this video, don't forget to click subscribe and smash that like button down below for the YouTube algorithm. So in choosing stocks, you must always look at its fundamentals, meaning you must know the true value of a company. This is what you call fundamental analysis. In fundamental analysis, you look at the figures such as the revenue, earnings per share, profit margins, and projected growth. But if this is something that you don't really want to deal with and have zero time for, you can always ride the market with minimal risk by investing into ETFs or index funds. These are basically a compilation of stocks in a specific sector that you can buy in one single share. For example, we have the SPDR S&P 500 Index Fund, which is a compilation of the 500 leading companies in the USA that has been around since the 1992. It has been averaging an annual return of 8% per year adjusted for inflation, which is basically around 10% because the inflation rate is 2%. As you can see, the increase is pretty conservative, but if you apply compounding and let it grow over time, that's where you see exponential growth. Now, if you do this and invest $500 a month for the next 30 years, which is probably when you're gonna retire, then you'll be able to join the 1%, of which are the current amount of millionaires around the whole world today, in dollars of course. So when you think about it, literally anyone can be a millionaire by the time they're 50, but unfortunately, not everyone is. Why? Because not a lot of people know about this. These are the things that aren't taught in school, and that's why I'm here to share that to you. These are the things that I learned from famous YouTubers such as Graham Stephan, Meet Kevin, Andre Jick, but their audience demographic is more around the millennials. I'm here to share it with the Gen Z and the Zoomers. Now you may be wondering, where do I research about these stocks? Well, there's a lot of ways to do it. First, you can go on YouTube and watch YouTubers talk about it. You can also read the news and get insights from professional analysts. You can also download a finance app that gives you daily insights and daily news about the market, such as CNBC, MarketWatch, Yahoo Finance, Bloomberg, and many more. You can join subreddits such as Our Investing and Our Stocks to get some decent information. Hell, you can even join Wall Street Bets if you want to gamble your money. You see, the possibilities are endless. Just remember to never trust anything instantly, especially if it's from a person in a comment section in YouTube or Reddit. Always look for a good source with good data. If not, always look for a second source with a second opinion. Now that you're convinced and want to start investing in the stock market and don't know which platform to use, if you live in these countries mentioned here right in the screen, then you can always use eToro and use my link below to support the channel. However, if you don't want to, you can always use other brokers such as Trading212, Interactive Brokers, and Plus500, and many, many more. Personally, I use eToro because it was the easiest platform to set up with. And they also have zero commission fees, so that was a win-win for me. You may also be wondering how I have an eToro account or a trading platform when I'm just 17 and still not an adult. Well, to be honest with you, it's not actually mine. It's my mom's account, and I just gave her the funds that I had so that I can invest in the stock market. And if you're a teenager and you really are willing to invest in the stock market, then you should do that too, because it's never too early to start. And also remember that the secret to getting ahead is getting started, so why not start as young as possible, right? Now, to conclude this video, I just want to say that the stock market is not a get-rich-quick scheme, because nothing is. It takes time and it's a process, and you will probably lose money, especially if you buy individual stocks and don't do enough research. But if you push through these obstacles and just keep on hodling, which stands for holding, that is when you reach success and acquire wealth over time. Remember, here in the stock market or anything in life, time is your best asset, especially if you are young. Money is something you can always regain, but time is not. So the best time to start in whatever you want to do, whether it's investing in the stock market, investing in real estate, or starting your own business, is now. And that's all I have for today. See you guys in the next one. Peace.